We are so blessed to live in the time that we do, in the country that we do, have the opportunities that we have, and most likely for you, be in the situation that you are. Got good jobs, so blessed with a family. We got this. The concern is, will I have this? Is the financial plan that I have, am I really confident that that's going to give me what I want in the future? Am I going to be able to retire comfortably? Am I going to have enough money to make it? Am I protected? Are the concerns with the market, the economy, inflation, is what I'm doing enough? These are common questions I think that we all have, that I have. Over the last 6 years, been very fortunate to be on a journey with Wealth Without Wall Street to create a strong financial foundation. And I want to share with you a case study of what it looks like for the typical person who's asking some of these same questions, what it looks like to use a foundational tool called infinite banking to begin to build a strong, certain, safe financial foundation. And I hope that this benefits you, that some of these questions you might be asking yourself, hopefully there's one thing in here for you. And so the way that I want to do this is I want to share, again, this case study. And the way that we're going to do that is to ask a very simple question. Here's how we want to do this. Is we want to move this forward, first of all. Ask this question. What's really going on? Our friend, Joey, the Italian stallion Murray, when we had an office, when Wealth Without Wall Street had an office, I would come to work, always before Joey. He would come in and he would ask me this question most days. He would ask this of Russ. He's asked this of everyone on our team. What's really going on? Which is a terrible greeting question because, to be honest, I had no idea how to answer this. But I think it's a great question for evaluating our finances. What's really going on today? What's really going on tomorrow? And what's really going to be going on 30 years from now? And I want to ask that question and break it down in 3 ways. First, I want to look at our friend Alex and his financial situation. So Alex's financial situation. Hopefully there will be a couple parallels for you. And really the question that we want to ask is what he's doing going to get him what he wants? And the questions that he has, are these things going to be solved for in this plan? Second, I want to share with you a solution, a foundation on infinite banking that helps close the gap on some of these things. And I want to share that with you. And then I want to share, just from the Wealth Without Wall Street perspective, how can we make this so much better? What are ways that we can enhance through infinite banking what Alex's family is trying to accomplish, and can we help him to achieve the things that we want? Hopefully, you seeing this for Alex will give you some ideas and inspiration on here's what I can begin doing. And if we do that, we'll call that success. So this is our friend Alex. The thing that I like about Alex is not what you're expecting. Alex has really hairy arms. Alex has got good hair, but he's got good hair everywhere. And I'll tell you, I can really relate to this. Me and Alex, I like this about him. Alex is 35. Alex has been married a little over a decade. Alex has 3 kids. Their kids are growing up. They're getting a little more mobile. Pretty soon, the youngest is coming out of daycare. We'll see if Alex continues to grow his family, but right now, this is what he's working with. Alex is a software engineer. He creates good income for his family. So for you, begin thinking about, okay, who are you? What is your family situation? What is your income situation? I'm going to share with you just Alex's. He is a homeowner. And the thing that I like his hairiness, but really what I like is his concern for his family. he is fully committed to raising his children well and providing for them. But Alex, when he talks about his goals, Alex is at a point where he's really starting to think about some things. In fact, this has been keeping him up. Here's the things that he's thinking about. He's done a great job starting his family, but financially, he just feels like he's a little bit behind, which, by the way, is not just Alex. This is common for the people that we work with. How do I know if what I'm doing is going to get me to where I want to go? He feels behind. As he's feeling behind, he's looking for solutions, and he feels a little bit overwhelmed because there's no shortage of opinions. He talks to his family, he talks to his friends, he talks to his people at his church. They got lots of ideas. He doesn't know which is the right path for me. What do I do that's going to help me accomplish where I want to go? And of course, Alex wants to do a great job providing. He wants to not only make sure that his family has the things that they need today, but he also wants to position him and his wife for success in the future. These are the things Alex is thinking about. So a little more about his situation. I mentioned he's a homeowner. All in, it costs him $2,000 a month for the mortgage, property taxes, the insurance, all his utilities, $2,000 a month. That's what it takes in his budget. Also, Alex has been, he's been really disciplined in his approach to vehicles. He 2 cars for the family. He buys a new one. He trades in the old one, puts that money down, pays off the rest over time. And that's for him and his family, that's been about $350 a month. But the thing for him is his wife's car is the older. On rotation, she's going to get the next car. They're going to sell the Sequoia. They're going to update to something newer, and they're going to trade in the old one and keep doing this. Once Alex's car is paid off, he's going to the next one. This has been a great plan for him. This is what he's doing. It's $350 a month. So just there between house and car, $2,300 a month out of his income, that's a pretty substantial chunk. So with his income, $120,000 a year, after taxes, he gets to see about $7,500 a month from that federal, state, just those things. He gets to see about $7,500 a month to run his household. Home, car, all these things is about $6,500 a month, which leaves him about $1,000 a month of cash flow, which for him, $120 a year, $120,000 a year, $1,000 a month is what he gets to keep. That's $12,000 a year. Quick math, that's about 10% of his income. He lives on 90%. He gets to take 10%, and that's what he's got to work with. So with this situation for you, right? Wherever your income level is, you can begin to think, what's my income? What's it cost me to run my household? What things am I paying for on a monthly basis? And what is my cash flow that I can begin to think about to put to work? So hopefully you can wrestle this down for yourself. And here's what he's thinking about. We've covered this: his retirement, his kids, they're getting older. He wants to start preparing for them. He knows he's got to buy a new car. And here's the real thing. Alex knows for his family, one of the experiences he wants to provide, this is just him. You probably have your own thing. Alex grew up with his family going to the lake. He would love to have a lake house one day. He would love to provide that vacation, that time at the lake with his family. That's one of his big goals. So for Alex, when we look at this, one of the couple of things that we want to evaluate is what's really going on for him. And so a couple of tools that he uses is he looks at his budget. He's run this, and we've created a simple tool to do this. Take a score of your finances. He knows that 7,500 is coming in and can just verify, hey, these are my expenses. So let's look a little bit deeper at that. Let me just do that. $7,500 a month net comes in. He's got no other income sources, just his work. He's got $1,000 a month of cash flow, which he's allocating to a retirement plan, which is pretty common. Take what's left over and let's put this away for the future. Here's that mortgage, here's that car loan, and then here's everything else in his life that he's got to be paying for. And man, it adds up. $6,500 a month. $1,000 a month, cash flow going to retirement. Here's his expenses. Perfect. Alex is really organized. For you, do you have this level of clarity of your finances? Would you benefit from a tune-up? If so, inside our Wealth Without Wall Street community, you can go to our website, join our online community, and get access to this resource. You can get yourself as organized as Alex is. The other thing that we can look at with him is, hey, is what's really going on right now going to accomplish for you in the future? So we've built this calculator that you can get access to. Alex is 35. He's wanting to become, able to leave his job, retirement age 65. Perfect. We know Alex's current income, $120,000 a year. But the thing is, we know that involves taxes. What we're really looking to do in this calculator is find out, hey, when I retire, what am I going to need to live on? And so for him, that's $7,500 a month. That's $90,000 a year that he needs. We mentioned that he's putting away $1,000 a month. That's $12,000 a year. And he's been doing that for some time, right? He's 35. Let's say that over the last 8 years, Alex has been saving this money. So if Alex has been putting away $12,000 a year, 8 years, that's $96,000. That's been in the market earning interest. So let's just say that right now he's got 110 in current retirement assets. What this calculator can tell us is that when Alex retires, he's going to need $3 million in assets, roughly, to create this income for himself. And this is built on what the market on average is doing, and the ability for him to take 3% out a year. And basically that just, you can listen to this interview here, get access to this with the doctor of retirement income. When he passes away, this distribution rate tells us that he's not going to run out of money, which would be really bad in retirement. So let's see how old Alex needs to be based on this run rate when he could do that. And this tells us that if he wants to be out at 65, based on what he's doing today, he gets there just about 9 years late, which 9 years in anything is a really long time. He's been saving for 8. That's been a very disciplined decision for him for a long time. And this plan's getting him there 8 years late. So let's just summarize what's really going on for Alex. He's been really disciplined. That's awesome. He started a family. That's awesome. He's doing things the right way. He's bought his house. He's being reasonable with major decisions like vehicles. He's got more income than he does expenses. He's putting money away like they've been telling him to. He's doing all the right things, but this plan has just got him 9 years late to his destination. How can we begin to implement some things that helps him create a stronger foundation? And that's what we're going to talk about in the next video.